Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Monday, January 19th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the ETFs are pouring into the gold market as global tariffs really come back into focus, while geopolitics remain at the forefront. Some basic housekeeping here. It is going to be a shorter futures trading session with most contracts closing early. So expect a lot less liquidity out in the markets as you're not going to see ETFs, individual stocks trade here as the bell opens. You look at the futures contracts overnight, looking at the overnight headlines and the impact on the markets. Gold and silver jumping to record highs as President Donald Trump, his push to take over Greenland really fueled the fears of a damaging trade war between the U.S. and Europe. The U.S. will slap tariffs on 8 European nations that oppose the plan to acquire Greenland, with European leaders discussing options on how to respond, including those retaliatory levies on U.S. goods. So you'll get the rundown on the precious metals. Many of the overnight markets here with the sea of either red or green on the screen, and looking at the tactical ranges, jumping over resistance 3, jumping below that support 1 here, with volatility really picking up. You look at the VIX futures here on the January contract of 1.82, that's sitting at 1839. It's up about 11% on the overnight session here. The front month will be that February contract if you're trading the large contract on the VIX. Now looking at the gold futures here, record high overnight, 46.98, falling just below that 4,700 mark, up about 1.76%. Last trading here, up $80 at 46.76. Looking at the silver market, up 5.48%, record high 94.36.5. The low of the session 90.51, and last year trading at 93.39. You do have copper futures slightly higher. You've got platinum and palladium just ever so slightly higher, with the only one under pressure is going to be that aluminum market. The average range on the gold markets, it's right around $87. That key level of support is going to be 44.18, but continuing to rise upward. The silver, the average range, $5.39, and the key level support, 81.55, but expect another big jump once the calculations go through on the algorithms. Precious metal ETF flows. Well, the ETFs, they were anticipating this type of volatility here, but I think that they were more focused on a potential conflict with Iran overnight, and we saw a lot of positioning going on in gold and also in the oil market. Oil futures down about 0.75% at 58.89. A global trade war really damages some of that demand here for the oil market. Now the ETF flows, they were buying 411,000 troy ounces of gold, and that was the most in 3 months on Friday. So you look at that day percentage change, up about 0.4%, with year-to-date total ETFs, they are up 0.9%. So just under 1%, pushing on up to some of the highest levels this year. So they're really starting to gain some traction on that gold market. And I believe that once we start breaking through some of these key levels of resistance, some of these upper boundaries, that's where 5,000 will really come into focus and beyond that level here, especially if you can get some tailwinds here as far as the Fed looking at easing some rates. So it was the biggest one-day increase since September 26th of 2025 and the 5th straight day of growth in those ETF flows. Now looking at gold, it is up about 6.5% this year, and it fell by about 0.4% on Friday. So the dip buyers really coming into that market and repositioning. Now the silver market, that percentage change here as far as ETF flows, down about 0.7%. Year to date, down about 2%. So ETFs cut about 6 million troy ounces of silver in their holdings on Friday. So really, we're seeing quite a bit of a rotation take place out of that gold and into the silver as far as ETF flows, but not so much as to disrupt things like the gold-silver ratio, as things still settle in here after some of that big rollover that we saw with the CRB, with the BIP, with the Bloomberg Commodity Index, which played no real impact on the market. I received way too many calls on some of these jittery headlines here that are insignificant in a way that they can impact this market greatly. Now you look at last week's changes here, they increased on the gold holdings, they reduced silver, they reduced platinum, and they increased the palladium holdings. The gold-silver ratio sits at about 50-1. So you'll get the macro markets and the broader themes here. You do have futures declining overnight, with the S&P down about 1%, the NASDAQ down 1.5%, the Russell down about 1.3%. That's one that I'll be watching for support levels. And then you look at the Dow Jones down about Yeah, 0.8% here, so under a little bit of pressure. You do have the fangs up ever just so bit slightly. Some key things to watch here are those European stocks and US futures really declining here, with the stock 600 on track for its worst day in 2 months. German automakers really led those losses, dropping about 4%. You get the tariffs between Europe and the US here, could really impact some of those exports. Sorry about the some of the squawk boxes I have were going off here. So the dollar weakening, the Swiss franc outperforming, and the U.S. markets, they are shut for that public holiday. So you look at the interest rate expectations, and this is where we want to see things really kind of change out, because it's kind of it's interesting to see how things change when you do have these new dynamics come into place here. Are some of the inflation expectations going to rise or decline, and how will that impact as far as those Fed cut expectations? So the January 28th meeting here, which is about 9 days away here, only about a 5% likelihood. So I'd write that one off here as far as them cutting rates, unless things dramatically take a downturn here. And you look at the March 18th meeting, about a 21% chance of that interest rate cut. The dollar's sitting at 98.896. The euro currency 116.58. 10-year futures, this is something to watch too. 4.25%. That's the highest we've seen in quite a bit of while. And we're getting to these levels here where things may start to break. As far as if we go above these key levels here, you might see some slowdown in some activity specifically around the housing sector. So you're looking at pushing through that top end of the range, which was 4.22%. And then you look at the VIX futures, 1945, so jumping over 19 on the February futures. We'll want to look at where the cash futures are, because if that gets over 19, you're going to see people's hair on fire here tomorrow as volatility will pick up. You do have Bitcoin futures, and a lot of times Bitcoin starts to front run some of this geopolitical risk, as you have a lot of state officials that are plugged into the knowing of what's going on, and one easy way for them to take risk on and risk off is through the cryptocurrency sector. So crypto's down about 2.5%. As far as Bitcoin, 93,125, still in that bullish trend here, but the key level sport's going to be right around 87,900. So you guys got any questions, futures option trading? I'll be around for a little bit. Plan on going fishing. Snowing in Florida here on the Gulf of America yesterday. So big snowflakes out there, but nothing sticking, nothing like we saw last year when we had the 5.5 inches. And you look at natural gas, up about 42 cents here, so up 13.5%. So quite a big jump on Feb nat gas futures here. So we'll see how that plays out as well. But you guys got any questions? You want to open futures trading account? Great day to do so here. We got the team on hand, and then also, I'll be available for a few hours if you want to talk any strategy. So remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.